Hi, I am Anna. I come from www.ntvforex.com. Chilled end to the week analysis. http ntvforex.com news ID 819309112023 54:19 p.m. A relatively tame end to an otherwise wild week in financial markets, which saw tech volatility resume while the pound had its worst week since March on Brexit uncertainty. The late sell-off in tech stocks on Thursday came just as the sector appeared to be finding its feet again and served as a warning that 1 week of sharp declines doesn't necessarily mean the correction is complete. The long weekend last week didn't bring any reprieve for the sector, with the sell-off accelerating on the open Tuesday before steadying on Wednesday. Monday will be very interesting. Ultimately, I don't think interest has waned in these stocks, but with the US and UK among those encouraging people to return to work and much of Europe already seeing much higher attendances, the pandemic hype around these stocks may have passed. That said, we're facing a tough winter when experts believe cases and deaths will dramatically spike once more, and that will bring with it more restrictions. We're much more prepared for it this time, and we're unlikely to see full-scale lockdowns again, but that may spur more interest again. Sterling headed for worst week since March, despite trade deal with Japan. What a week for the UK. Brexit talks have gone horribly, with the UK government's decision to introduce the Internal Market Bill into Parliament frustrating not just Brussels but members of Boris Johnson's own party. With specific pieces of the legislation effectively undermining the withdrawal agreement signed only this year, trust between the two sides has hit rock bottom. This may jeopardize more than just a UK-EU trade deal and may end up being the Prime Minister's next embarrassing U-turn. On a more promising note, the UK signed a trade deal with Japan, its first post-Brexit agreement. The news was welcome after weeks of uncertainty. It didn't give the pound much reprieve though, as it suffered its worst week of trading since March. The Brexit no-deal risk premium is back in the picture, not to mention the levels of volatility we've become very accustomed to over the last 4 years. Oil steadies after entering correction. Oil is in correction mode but has steadied over the last couple of days after plunging more than 15% late last week and early this. Numerous reasons were given for the fall, but the reality in situations like this is that there were a lot of stale long positions that bailed the minute it started looking a little weak. Theta's fine, perfectly healthy in fact. And we are heading into a challenging winter period for the global economy. A vaccine is needed, or it could be a tough few months for oil producers. With prices back below $40, I can't imagine there'll be a great rush among producers to further trim output cuts in any significant way. Gold remains vulnerable despite bounce back. Gold has enjoyed a decent week after looking very vulnerable early on. A bullish dollar breakout that appeared to be triggering a correction was very problematic for gold, but the breakout has stalled quickly, aided by the ECB opting to take a more considered approach than had been previously rumored. As we saw immediately after yesterday's decision though, the dollar quickly bounced back and with some force, potentially signaling that EDA's not giving up the correction easily. Gold remains vulnerable and the path of least resistance looks below. It may just take a little time for the dollar to overcome some of the stubborn shorts. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.